Hey, it's Michael Saul, also known as Tiny, with the market video for the week of April 8th, 2013. So let's take a look at the markets and what I'm looking at coming up for this week. So here's the SPY, and you see here we had a sharp gap down. Well, first we'll go back to Wednesday, which was an ugly day. Thursday we paused, and then Friday we had the nice gap down off of the job numbers, and we rallied all day long. Couldn't quite get green, but we still had an okay day bullish wise because they bulls came in and bought that gap down. So you have to give it to the bulls. I mean, you can see the Nasdaq closed under the 50-day, so not really ready to give the Nasdaq to the bulls, but you can see even the Russell, which has been leading to the downside, gap down and closed at the highs right on the 50-day moving average. And the Dow, which is not much, who cares, but held the 20 EMA and got a bounce as well. All right, so let's look at some sectors quick. Semiconductors are under pressure. Financials, wow, nice move on the financials. Gap down below the 50-day and recovered. So that's good. The banks have been acting like crapola. They formed a hammer. The brokers had been acting like crapola. But I think this chart is okay. I thought there was something screwy with the chart if you read the newsletter, but it looks like it's okay. That's the brokers, and insurance is leading in that group, but also obviously seeing some pressure here on the downside, but did close above the 20 EMA. So I go into more detail on the indexes in the newsletter, but my opinion is that we are still going to give it one more try up. I may be being a little too biased here. We came just shy of hitting those all-time highs on the S&P 500, and I think it's still going to happen. Could this be a double top? Yeah. I mean, I'm not saying it's definitely not one. So it's possible that it could be one. Let's throw an RSI up here. We do have a divergence up here. This is just a standard 14-period RSI. So we do have a divergence here. I am going to be watching to see if the 50-day moving average, if it does go low, if that holds. Now, remember, we have a divergence within the S&P here, but nothing is saying that we can't rally up here in the S&P, complete the pattern here that I think this is a left shoulder and this could be a possible head. We could come up, we could hit the highs, and then the Nasdaq could continue its laggingness, if that's even a word. It's been lagging for a while, and the Russell could come up lame. The Russell's been leading, so if the Russell rotates up, maybe it comes up lame while the S&P is hitting the test of 2007 highs. I don't know. That's still the direction I'm leaning, but I can't ignore this damage here. It's not horrible. We're not below the 50-day moving average. We've had some pretty sharp angled moving averages here. So it's, breaking them is not, that's it, the end of the world. Look, if we get down through the 200-day, if we got down through the 50, I would be concerned. But if we got down through the 200-day, then it's a different story. These are shorting-term moving. These are shorter, not shorting-term. These are shorter-term moving averages here. So slicing through them is not exactly the biggest bearish thing. All right, so let's see. I hate to be a permeable here, and I'm not, but I still think there's work to get done up there. And I think once it is done, I think we can have a significant decline here, at least back to maybe this neckline, which would be pretty deep. Then maybe we come up lame with a right shoulder and then continue down. But I talk about all that in the newsletter. So have a great trading week. Contact me with any questions. I'll talk to you via the daily email, the daily newsletter, or in next week's video. Take care.